Analysts are predicting a minimum 3x increase, meaning a 300% rise, for Supermicro stock in a very short time. But in the coming minutes of this video, I'll touch on some details that will literally blow your mind. If you're like me and don't want to miss out on an opportunity like the 400% profit I made in just 4 months by investing in Sezzle, please, whatever you do, don't click away. Watch this video until the very last second and don't forget to join our WhatsApp channel through the link I've pinned at the top of the comments. So, let's get started. Supermicro has turned into the darling of investors in the world of artificial intelligence and data centers, and the company's revenues are experiencing an absolute explosion. For example, in the 2024 fiscal year, their revenue reached nearly $15 billion, which is a 110% increase compared to the previous year. Supermicro produces the main tools and equipment driving the AI boom, everything from GPU servers to complete data center systems. Analysts believe the wave created by artificial intelligence is long-lasting, meaning companies will increasingly need more powerful computing systems. Now, let's take a look at the 10 main and logical reasons why investing in this company makes sense. The first reason is the massive boom and demand in artificial intelligence and server needs. Supermicro has become one of the key players in the era of advancing AI technologies. AI systems, especially large language models like ChatGPT, require incredibly powerful servers and vast amounts of memory. As the use of these technologies grows, companies will need more computing power to meet this demand. This rising demand creates huge opportunities for server manufacturers like Supermicro. The company's financial results for the 2024 fiscal year prove this. For instance, their revenue exceeded $15 billion, more than doubling from the previous year. Analysts predict that investments in the AI sector will accelerate even further. This means the demand for high-performance servers will stay strong for a long time, and Supermicro is one of the leading companies building these powerful servers. The second important reason is the company's massive partnerships with huge, top-tier companies. Yes, one of the biggest reasons for Supermicro's success is its strategic partnerships, and its most critical partner is NVIDIA. As we know, NVIDIA is the leading producer of the most advanced GPUs needed for artificial intelligence. Most AI systems run on these chips. Supermicro is one of NVIDIA's closest technological partners. In fact, the company was among the first manufacturers to integrate NVIDIA's latest Blackwell architecture-based GPUs into their server systems. This means Supermicro can deliver the newest and most powerful AI chips to customers quickly and efficiently. According to some industry analyses, Supermicro currently controls about 9% of the AI server market. That's a significant share and shows the company has a strong competitive edge in this field. On top of that, Supermicro's server systems aren't just about GPUs, they're also optimized with specialized boards and advanced cooling technologies to ensure these chips work properly. This means customers can seamlessly install and use multiple NVIDIA accelerators in one system, and Supermicro is the go-to brand for this. The third reason is their innovative cooling and energy efficiency technologies. One of the key ways Supermicro stands out from its competitors is through the significant steps it's taken in energy efficiency and cooling. Servers used for AI are so powerful that they generate a lot of heat and consume a ton of energy, which creates both technical and financial challenges. Supermicro is one of the companies tackling this problem smartly. Instead of traditional air cooling, the company uses direct liquid cooling technology. This approach allows servers to take up less space, use less energy, and disperse heat more effectively. As a result, customers save on both electricity costs and physical space. According to data, this technology can reduce operating costs by up to 20% and make systems last longer. These innovations set Supermicro apart not just in terms of products but also technologically in the market. Especially for large data centers and AI platforms, such efficient and reliable systems are highly appealing. As a result, Supermicro has become one of the rare companies that can meet modern server needs in terms of both performance and savings. The fourth major reason is their complete data center solutions. Supermicro is no longer just a company selling individual servers and equipment. It has transformed into a tech giant offering full data center solutions. The company's new Data Center Building Block Solutions concept provides a complete package that combines servers, storage, networking, and cooling systems. Since these systems come pre-assembled, buyers no longer have to pick and assemble each component separately. This approach is a huge advantage, especially for large data centers and hyperscalers, as it saves time and reduces technical technical risks. Supermicro systems take up 60% less space compared to traditional setups and use about 40% less energy. That's a big win both technically and economically. As a result, Supermicro offers customers not just a product but a complete solution, pushing the company even further ahead in the market. The fifth reason is the company's impressive financial growth. Supermicro's financial metrics have shown incredible growth in recent years. In 2021, the company had a total revenue of $3.6 billion, but by 2024, it reached nearly $15 billion. Just in the third quarter of 2025, the company recorded $4.6 billion in sales, a 19% increase compared to previous years. Management is forecasting revenues between $20 and $25 billion for next year. Analysts believe Supermicro could sustain an annual growth rate of around 30%. Simply put, the company is currently in a very fast and stable growth phase, which continues to attract investors. The sixth reason is the company's strong balance sheet and acquisition potential. We absolutely have to talk about this. Supermicro's financial position stands out not just for its revenues but also for the cash it holds. At the beginning of 2024, the company had over $2 billion in cash. This gives Supermicro a significant advantage, allowing it to acquire smaller tech-focused companies or invest comfortably in research and development whenever needed. Analysts think the company could use these resources to buy out competitors and gain a larger market share. Even if no acquisitions happen, having this much liquid cash serves as both a safety net and a solid foundation for future growth. The seventh important reason is its flexible production model and ability to offer customized solutions. Not every big company can do this, and even if they can, they don't manage it with this level of flexibility. Unlike traditional mass production, Supermicro uses a flexible and modular production model. Thanks to this system, server and data center solutions tailored to customer-specific needs can be developed quickly. This flexibility is especially valuable for large tech companies and hyperscalers. Whether a customer wants a dense GPU setup, an energy-efficient design, or any other custom order, Supermicro can deliver it in a short time. This keeps the company one step ahead of its competitors and gives it a superior position. The eighth reason is the company's experienced and visionary leadership. Supermicro's founder and CEO, Charles Liang, has been leading the company since 1993. As a leader with deep technical knowledge and a strong understanding of the industry, Liang makes long-term decisions and focuses on sustainable growth rather than short-term profits. Under his leadership, Supermicro has consistently adapted quickly to new technologies and responded flexibly to market changes. This leadership stability and technical expertise are a huge advantage for investors, and since the company focuses on long-term gains, it has the potential to turn long-term investors into millionaires. The ninth reason is the high ratings and future price forecasts from analysts. Before I get you excited about the price predictions, let me say that you're currently watching one of the rare YouTube channels that delivers such useful and high-quality information. So, be sure to subscribe so you don't miss out on the next million-dollar investment opportunities. Yes, many financial analysts believe SMCI stocks are still undervalued compared to their true worth. At the end of 2024, some analysts were forecasting a share price of around $100. One of the main reasons behind this is the company's consistent revenue growth and direct impact on the AI sector. For example, Loop Capital analysts initially set a target of $150, later revised it to $100 while maintaining a buy rating. Meanwhile, Bank of America analysts set a price target between $104 and $128, and Northland analyst Nehal Chokshi first suggested $92.50, then raised it to $130. If the demand for artificial intelligence continues at this pace, and it looks like it will, Supermicro's market share and revenues will grow even more. That's why analysts consider the company's stocks a profitable long-term opportunity. If we evaluate the analysts' forecasts, a target range of $100 to $150 for a share currently below $50 means a minimum 2x to 3x growth potential. In other words, a 300% increase. The 10th and final reason is the low price-to-performance ratio, or valuation. Despite the company's rapid growth and high profitability ratios, Supermicro is still undervalued compared to other tech giants. For example, while stocks of other companies in the AI sector trade at 50 to 60 times their revenue multiples, SMCI remains more conservative in this metric. This means the company is still at a buyable value in the market. As this discrepancy fades in the future, SMCI stock prices could see significant increases. So, what do you think about this company? In your opinion, is there any company in the market right now with more potential and higher profit potential than this one?